Okay, so we are live now, and today we'll be learning more about the smart money concept. Yesterday, we covered numerous topics on an understanding of smart money concept. If you are new to this channel, you can subscribe, like, share, and so what are we learning here today? Let's see. Wait a minute. Let me see. See, yesterday what we are learning is we are learning in this stream, we are learning about smart money concept. What is a smart money concept? We have already covered in our video. So we are continuing this series to learn more about smart money concept for free. I'm running a free course on smart money concept, telling you about everything I know as a person, I know, or as an experienced trader, what I know, I'll be sharing that with you people. Okay. So yesterday what I taught you is that smart money concept in smart money concept, the price action is a little different, right? Though it somehow seems same, but still it is a little different. Why? So now in smart money concept, what we do is we see the uptrend and a downtrend in a very different way. See, this is our uptrend, and where we are confirming our swing high point and swing low point. This is our swing high point in our uptrend, right? But how we mark this uptrend? We marked this swing high point, this uptrend, when market takes inducement. And what is an inducement? See, inducement is the last pullback which the market takes. Okay, the last pullback which the market takes is known as inducement. Okay, and after taking inducement, what we do is we wait for the market to break the structure to the upside, like this, right? And when the market breaks the structure here, which is called boss break of structure, we marked this as our swing low point. So this is called an uptrend structure of the market according to smart money concept. But what people fail to do is they don't know where the pullback is, or they don't know how to identify the pullback. And as a result, what they do is they take wrong trades. What they do is they take trade here, which is the smart money trap. The smart money traps you at this zone, and after that what happened is they tend to go in the other direction, which we have covered yesterday in our video, right? So today what we'll do is we'll firstly understand what a pullback is. Okay, what we're gonna do is we'll first understand what a pullback is and how a pullback looks like, because once we learn to identify the pullback, once we learn how to identify the pullback, once we learn where the pullbacks are, then we can easily save ourselves from the smart money trap. Okay, so pullbacks. Today I'm going to give you a little lesson about the pullbacks, how to identify it, where to spot it, and everything. Okay, so make sure to watch this stream till the end, and you will have a very insightful lesson about the topic. Okay, so now let's start. See, what a pullback is, how to identify pullback. We need to have candles. First of all, let's draw candles. This is one candle. This is a bull. Let's say this is a bullish candle. Okay, so let's cover it with green color, right? And let's increase its opacity. Okay, great. So this is the first bullish candle which a market is forming. Okay, right, great. Now what happened is market again break this candle. Okay, and we have another candle here, like right here. Okay, so this is the next candle we have. Now what happened is in the third candle, in the third candle, and it doesn't matter whether it's the third candle or the second candle or the first or second candle, third or fourth candle. What happened is market needs to break, listen very carefully, market needs to break the low of this candle. Market needs to break the low of the previous candle. You getting my point? Wait a minute, let me draw this right. Okay, this is the previous candle of this pullback, and what market needs to do is market needs to break the previous candle low in an uptrend. I'm saying in an uptrend market needs to break the low of the previous candle. Now it doesn't matter whether market draws a wick or a body, it doesn't matter, listen very carefully. I'm not, it doesn't matter whether market have a body or the wick. Like, let me draw it like this. Doesn't matter whether market has a the candle has a wick or a body closing below the, what we need is the breaking of the previous candle low. Okay, what we need is the breaking of the previous candle low. That's it, and that we'll call it a pullback. How we'll call it a pullback? We'll see the pullback like this. Wait a minute. We'll see the pullback like this. Market is going up. After that, market may go in our direction, or market can come down and create a larger pullback. It doesn't matter. First we need to understand the pullback. Okay, so how a pullback looks like? A pullback looks like when the previous one candle, two candle, three candle low. And why I'm saying two, three, four, five candle, let's understand that also. Okay, see, sometimes what happen is market, and listen very carefully, the color of the candle doesn't matter. Okay, the color of the candle doesn't matter. Okay, now what I'm saying is it doesn't matter market. Sometimes what market does is market makes so many inside candles inside one big candle, and because of that people often get confused that okay, this is the pullback, because what I have said is market needs to break the low of the previous candle. So this is a previous candle. Now why people get confused? They say okay, this candle is breaking the previous candle, so it is a pullback. No, it is not a pullback. Why it is not a pullback? Because it is being formed inside this large big candle. Okay, listen very carefully what I'm saying. The market is make downside. Because of that, a market has not create a valid pullback. So when does a valid pullback happen? See, a valid pullback happens when the market breaks this very candle, the very large candle, to the downside. Okay, when the market breaks this of the very big candle to the downside, then only we can say that the market is making a pullback, right? After that, it's up to the market to go in our direction to the uptrend or to come down lower. Okay, it's depend according to the market situation. But how to identify a valid pullback? For a valid pullback to happen, market needs to break the previous candle low in an uptrend. And if a lot of candles are being formed under one big candle, then market needs to break the low of that very candle. मेरी बात आप लोग को समझ में आ रही होगी. Okay, so this is how a valid pullback looks like. And now what happened is when market moving in an uptrend makes this pullback, and after making a pullback go above, then again come down, okay, and takes this inducement, then only we can then only we can mark this as our swing high point. Okay, I hope you are getting my point. Then only we can get our swing high point. Now what happens what happens that suppose market is moving in a straight line like this, like this, like this. Now what happens is sometimes what people do is they often get confused that, like, suppose market has made this structure and then this and then like this, right? Now why people get confused is people see this as an inducement, because people say that this is a pullback which the market has taken, right? And they mark this as a swing high point. But let me tell you that this is the wrong way of structure mapping. According to the smart money concept, according to the smart money concept, this is a single move, right? That means the market is moving like this. Why? Because for an inducement to happen, listen very carefully, for an inducement to happen, market needs to take in an uptrend. In an uptrend, market needs to take the pullback in this move, not in this move, right? Listen very carefully. It's a little bit confusing. Market needs to take the pullback in. This is called an impulse move. This is called a corrective or pullback. Market needs to see the pullback in an impulse move, right? Market needs to see the pullbacks for inducement. Market needs to see the pullback for an inducement in the left. In an uptrend, this left hand side, this left hand side move, market needs to take the inducement on the left hand side, not on the right hand side. When market, for this move, let's see, we are saying this move, market moving like this. For this move, the inducement is there, okay, which when market breaks this structure, it shifts to there, okay. Suppose market has taken the inducement like this, then we can say that the market has taken the inducement. But right now, when the market has not break this low, this swing point, we'll see this as our inducement. And why we are seeing this as an inducement? Because market has break this high. Suppose market has not broke this high, like the market structure is here. Now, where we have our inducement? We have our inducement here. Till when? Till this high is protected. Till this high is protected. Till then, we don't have an inducement here. We have an inducement here. But as soon as market breaks this high, we shift our inducement uptrend. Give you an example so that you can easily spot it. Okay. Now, in this move, see, this is what I was talking about. Here in this move, if you see this candle, see very carefully. If you see this big candle here, the high, and this is the low of the candle. Now, all these candle, Now all these candle inside this big large candle happen. Wait a minute, why it's not working? Something happened, something. Yes, now we are here. So what happened is, when you see the high of this big candle is protected here, the low of this candle is protected here, right? So in between all this move is what? It's an inside move. It is not a valid pullback. It's just an inside move. It's just what? It's just an inside move. Why it is not a pullback? It is like this. The market is, according to smart money concept, the market is moving like this, and after that market pull back and has created an inducement for us. Now when the market breaks this here, either a wick or a candle closure, when the market breaks and comes down, then can we say that the market has taken our inducement. Then we can say that the market has taken our inducement. Okay. So this is how we spot inducement in an uptrend. First, what we do is we look for a pullback in the left hand side, not on the right hand side. And after, when the market takes this swing low point, sorry, a pullback point, we mark this as our what? As our swing high point. And why this? Because this is the highest point. Now, till when can we look for a swing low point? Till this high is protected. When the market breaks, which the market hasn't break, but when the market breaks this swing high point, then only we can make a swing low point. For a swing low point, we have this as a protected low. Observe very carefully. We have this as a protected, and when the market breaks, the market hasn't broke it yet. Observe it very carefully. The market hasn't broke that yet, but when the market broke, because market has only swept the liquidity right now, we need a proper breaks. When the market breaks this structure, what we say, that the market has taken the low and is now what? The market is now in a downtrend. Market has changed its character, which we have studied yesterday. And this is how a smart money concept works. For a smart money concept to happen, like, see, why we have marked this as a swing low and high is market has taken, this is the pullback. Now what people will be thinking is, this is also a very good concept. What people will be thinking is that market has taken the inducement here, right? So that should be breaks the low, then only we can mark this as a swing high and low point. This is a low point, correct? But we can only mark the swing high point in a downtrend when market breaks this low. But market hasn't broke; it has only swept the liquidity, and because of which, listen very carefully, because of which we cannot see this as a swing low point. So we need to transfer that swing low point from here to here, and this becomes our inducement here, which when market breaks and do a chalk here, the market already converts from a bullish to a bearish point of view. So this is a small lesson on a pullback. I hope for you to come tomorrow to learn how to do